Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, August 7th, 2025, we're dissecting Bitcoin, or BTCUSD, a cryptocurrency that never ceases to provide thrilling market movements. First, let's look at the headlines that are currently shaping investor sentiment. Big news from Bakkt, who recently secured a 30% stake in Japan's Marusho Hata, effectively adding Bitcoin to their treasury and signaling growing institutional adoption. This is a significant bullish indicator, expanding Bitcoin's reach into new global markets. Furthermore, we're hearing bold predictions from figures like Tom Lee, who believes a strategic move could propel a company to immense success if Bitcoin hits $1 million, echoing Michael Saylor's vision of changing the reality of the stock market through Bitcoin. Another institutional boost comes from Parataxis, completing a $400 million SPAC merger, which has already resulted in a staggering 775% increase in their Bitcoin investment. On the regulatory front, the SEC dropping news that certain liquid staking tokens are not securities is a positive development for the broader crypto ecosystem, potentially paving the way for Ethereum ETFs and indirectly bolstering confidence in the digital asset space. However, there's a note of caution. While Bitcoin benefits from a weaker dollar, credit market signals warn of possible investor caution, which could hinder a direct run to $120,000 in the short term. These mixed signals mean we need to pay close attention to the charts to understand the underlying price action. Let's move to the one-day chart to get a macro perspective on BTCUSD. Looking at the one-day chart, stretching back from March 2024 to today, August 7th, 2025, we can clearly see a dominant bullish trend, despite significant pullbacks along the way. Bitcoin experienced a strong rally in November and December 2024, pushing from the mid-70,000s towards the $100,000 psychological level, and even briefly touching a record high around $109,135 earlier this year. This surge was likely fueled by the initial wave of institutional interest and positive regulatory sentiment. However, following this peak, Bitcoin faced a notable correction in February and early March 2025, dipping significantly, potentially reflecting those very credit market concerns mentioned in our news segment. The price found strong support around the $85,000 to $90,000 zone before staging a remarkable recovery. If we narrow in on the period from late April 2025 to late May 2025, specifically from April 21st to May 23rd, as you can see now, Bitcoin made a decisive move, breaking back above the $100,000 level with conviction, which is a very bullish sign. The subsequent price action, particularly in July, shows a retest of previously established resistance levels, which are now acting as strong support. The area around $110,000 has transformed from resistance to a new support floor, a classic bullish reversal pattern. The recent positive news regarding Bakkt and Parataxis likely contributed to the upward momentum we've seen throughout July and into early August, pushing us close to the all-time high again. For traders, maintaining positions above this $110,000 level is crucial to sustain the bullish narrative. A break below it would indicate a significant bearish reversal for the short to medium term. Let's zoom in further and look at the one-hour chart to understand the immediate dynamics. Shifting to the one-hour chart, focusing on the last few weeks, we observe a clear upward channel forming, with higher highs and higher lows. This indicates strong buying pressure on dips, confirming the short-term bullish sentiment. We can identify immediate support around $117,000, which has been tested multiple times without a significant breakdown. Resistance is currently around the $120,000 psychological mark, which Bitcoin is battling to overcome. Notice the increased volume on some of the recent upward movements, suggesting that larger players are stepping in to support the price. The peaks around $119,000 to $120,000 have proven to be significant short-term resistance points, requiring substantial buying power to break through. A sustained break above $120,000 on high volume would signal a powerful continuation of the rally. Conversely, A breakdown below $117,000 could lead to a quick retest of lower support levels, possibly around $115,000. Traders should watch for candlestick patterns such as bullish engulfing or hammer candles around these support levels for potential long entries. Now, let's drill down to the 15-minute chart to capture the most recent intraday movements. On the 15-minute chart, we see the immediate price action and very short-term trends. The price has been consolidating in a tight range recently, hovering around $114,000 to $115,000. This consolidation after the recent run-up could be interpreted as a healthy pause before the next move or a sign of indecision. Volume here is relatively lower compared to the more significant moves on the daily chart, indicating a lack of strong conviction from either buyers or sellers in this immediate time frame. For intraday traders, the range-bound movement means opportunities for scalp trades, buying at the low end of the consolidation and selling at the high end. However, the risk of a breakout or breakdown from this tight range is always present, so strict stop losses are essential. The key levels to watch here are the immediate resistance at $115,220 and support at $112,622, based on the recent highs and lows within this tight range. A strong candle breaking either of these levels with increased volume would likely dictate the short-term direction. To recap, BTCUSD has displayed overall bullish strength since March 2024, currently trading around $115,000. Key support levels to watch are $110,000 on the daily chart, which has proven resilient, and $117,000 on the hourly chart for immediate protection. Major resistance stands at the psychological $120,000 mark and the all-time high around $119,500. The bullish case for BTCUSD remains strong, reinforced by continued institutional adoption, as evidenced by backed and parataxis investments and optimistic long-term predictions from prominent figures like Tom Lee. The weakening dollar further supports this narrative, making risk assets like Bitcoin more attractive. We believe there's a high likelihood, perhaps 70 to 80%, that Bitcoin will retest and potentially break past its all-time high in the short to medium term. This likelihood would be reinforced by sustained high buying volume, continued positive regulatory clarity, and a general risk-on sentiment in global markets. On the bearish side, the credit market concerns mentioned in the news could trigger a significant pullback, especially if Bitcoin fails to decisively break the $120,000 resistance. There's a moderate likelihood, say 20 to 30%, that we could see a retest of the $100,000 to $105,000 range if current resistance holds and selling pressure increases. Conditions that would reinforce this bearish outlook include a sudden tightening of credit markets, a strong rebound in the dollar, or negative macroeconomic data. For traders, consistently monitoring trading volume is paramount. A breakout on low volume is less reliable than one accompanied by significant buying or selling pressure. Look for clear candlestick patterns confirming reversals or continuations at critical support and resistance levels. Always remember to manage your risk with appropriate stop-loss orders, especially in a volatile asset like Bitcoin. Thank you for joining Explain the Charts for this in-depth analysis of BTCUSD. Stay informed, stay safe, and happy trading!